Hello and Happy New Year. This is Chris Lamb and this is the market update for the month of January. It's our first market update of the year. We're going to try to keep this as short as possible, but there is some really important topics we're going to cover. Starting with a little quote from someone from Bloomberg, just talking about the mindset of people since the election. Consumer confidence jumped to the highest level since 2004, extending a surge in Americans' optimism for their finances and the U.S. economy following Donald Trump's election victory. The University of Michigan said that its final index of sentiment rose to 98.2 from 93.8. And really what that is explaining is people are overall very positive about 2017, and it's certainly playing into the housing market. Now, if you were to look at interest rates right now, which we're going to talk about towards the end of this video blog, you'll see that rates are actually higher, which in previous years would actually slow the housing market down. But right now we're seeing a surge, not only here in Northern California, but throughout California and the rest of the nation. So being at the beginning of the year, one of the things we just want to remind you is it is tax season, and I'm sure you didn't need a reminder for that. But if you bought a house of any kind, whether it's an investment, a second home, or a primary real estate, a primary residence, you want to make sure that you get that closing statement. We've sent out a closing statement to most of our clients this year so that when you guys file your taxes, you have that and you can write off all the fees that are tax deductible, etc. But if you haven't heard from us and you guys need help on that, please make sure you reach out to the office. Now, talking about that surge in real estate, one of the other contributing factors to the surge is that we're seeing inventory really low once again. This has happened every time, right about the same time of the year for the last 4 or 5 years. But this year, especially here in Shasta County, in the last month, we've seen inventory hit lows that we haven't seen for a long time. And what inventory basically is the homes that are available on the market for buyers to buy. So there's a lot of pent-up demand, and there's still people that are finding a really hard time finding homes. And that trend is not only here in Redding, but it's also throughout California. And so we expect to see one of the busiest springs and summers that we've seen in a long time, if not the busiest this year. And I'm not the only one thinking that. And we want to really kind of touch on interest rates. I'm going to bring up a few slides here. Now, I mentioned early on this video blog that interest rates have they've gone up a little bit. And since the election, they've gone up into the 4s, and they've gone up right about 0.5%. If you were to look back at January of the following year, so 2016 January, rates were right at about 3.97% on average. Towards the middle of the year in July, we saw rates to drop once again to the lowest point in history, and they're around 3.25% to 3.5%. Now, if you skip forward to currently this month in January, rates are right around 4.25%, and since the election, they've gone up by about 0.5%. And if you think about it, that kind of movement in such a short period of time is very volatile, and it's definitely had some sort of an impact on people's ability to buy homes. And so what we really want to kind of clue in on, bringing another slide up here, is what we expect rates to do through the rest of the year. So if you were to look at the first quarter of this year, as I mentioned, rates are at about 4.25% for a 30-year fixed mortgage. Most experts are predicting that they will continue that pattern through the rest of the year, and by the fourth quarter of this year, we'll most likely see rates in the mid to high 4s and kind of resting there for a while. Now, just to kind of end on that note, rates are still very low, and I think most of you would agree, especially those of you that have bought homes 20, 30 years ago, that a rate of 4.5% is still an amazing rate. But what's happened is over the last 3 or 4 years, obviously we've all kind of gotten spoiled with rates being in the 3s. So if you guys have questions about this or anything else, I hope you know you can call me anytime. And as always, we really appreciate everything you guys do for us, all the referrals, and please give us a call at the office.